The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the 11 o'clock to 12 o'clock show, Monday through Friday on market days. And thank you, Steve, for giving us a great 2 hours. And of course, straight after this, Larry Pesavento should be back. Got great shows all the way. Hey, I'm going to start off right away by saying you've got until Thursday at noon to go to the front page, check out the $10,000 giveaway, $300 to $3,000 cash prizes, just unbelievable. And it's right here at TFNN, just a fabulous methodology to be able to, it's very similar to options in a sense because you can define your risk, but this is a lot different in that the strategies that are available on the Nadex, there are myriad strategies. You don't even have to be a specialist in a particular area like natural gas or something. You look at the charts, and there's a particular platform that you can learn to use. A lot of it developed by Daryl Martin. You can listen to his show at 1 o'clock. 1 o'clock. And I think that it's a no-lose proposition because it's 1 week. You have to get your name in by Thursday, obviously, because they have to get everything sorted out. By Monday, you're starting to trade. That is next Monday, this coming Monday, a week from yesterday. So please go to the front page of TFNN. Now let's just hit the market. Let's go one by one. Beginning of the week, beginning of a new what? A new misnamed month. The 7th month, September. So here we go. The E-minis. E-minis are trying to rally after a huge gap up and just a stupendous evening on Sunday night. Followed through somewhat on Monday, and this morning, I would say so far, this is just horrible action. The Dow is up 85 at 14,896. The S&P is up 14 at 1647. The comp index is up 43 at 3632. Gold is up almost $6 at 1401. Silver's up at 86 cents at 2432. Platinum's up 17 at 1536. Now you've got high-grade copper up 7. That's really important. Back in the 330s. That's good. I like the 330s better than the 3s. Crude oil is about unshed, 107.60, and bonds are down 2.5 points at 130.30. I mean, 30 ticks, 130.30. I mean, wow. That's all I can say. And the dollar is up 35 cents at 82.49. I'm going to show a couple of charts here. Maybe I'll go to it right away. Look at this. Here's the UUP. This is the Power Shares Dollar Bull US Dollar Bull ETF. I think it's an ETF rather than ETN. And look at this. It's just stuck in a range. It's just stuck. But this is very important. If I use the technique that I always discuss here, the Chapman Wave inside track, and I put a little green line right there and a red line right here, I really don't like to overdo and mess up the charts, make it as simple as possible. It has gone back into the buy zone, and it's been propelled. So this is a new leg A, a gray A, because it hasn't broken above 22.98. It's trading at 22.27. This is the UUP, up 0.08. And what's interesting about this, it's just stuck in the trading range. But what's very important is it's begun, even within the trading range, to make higher highs and higher lows. Slightly higher lows, but higher lows nevertheless. Now, this is important. The dollar, there's a relationship here that is a little different to what we normally would be looking at, because the dollar rallying is rallying with the market. So that's just enough said there for the moment, because I want to get to the SPY. I'm pretty sure that I'm going to have to call this peak F top. In fact, I'm going to put it in right now. If I'm wrong, I'll change it. But right now, I'm calling this a peak F top in the weekly chart. Oops, capital F right there. Is 6 highest peak in the Chapman Wave. Give me a yellow and I'm going to go with an inverted hat. That inverted little V-shaped pattern right there says, right there, let me just give me 1 second, pull it down, there you can see it with a little, there you are. If you're looking at Tiger TV, you can see it, very interesting chart formation. And that says, in my work, that at at 170.97, with a 2-bar signal in the chaff wave, it's another technique that I've developed, there is a really good chance that the SPY has made a pretty significant short-term going to intermediate-term top. That's the way I'm looking at it right now. Whoops, let's go to the TLT. Down 238, 103.61 for the TLT Lehman 20-year T-bond fund. I have a good... If the 102.11 low of the week of the 23rd of August is taken out for leg D to the downside, only at that point will I start to see some kind of a signal that says bonds could now have a decent bounce, and that bounce could start to see money go back into the safety, I love the term, the safety of bonds while the stock market digests these gains. I'm not doing anything right now. I have no position in the bonds or the TLT or the TBT. I'm just looking at it because I wanted to give me that information. But wait a minute. If I go, let me just move this away for 1 second. Here, these are the black background charts. If I look at this particular chart right here, I had said last week that I think there's a weekly sell signal, a weekly peak D in the TYX at 39.30. And there's a peak D in the 10-year note at 29.20. And a peak B, which has now gone to a leg C in the 5-year. This is the divergence between these three instruments is really important right now because the spread had widened and now the spread is narrowing a little bit. If I can just do that and get a color on it, make it gray or a cyan, there you are, right there. So it was 17.24. That goes has changed. So bonds pulling back sharply. There should be money going into stocks right at this particular point. We'll see about that. Now, this is also very interesting because WOOD, wood, is the symbol for the iShares Global Timber and Forestry ETF. That's stuck after a peak A in a pattern that I call the right shoulder failure, which looks a little bit like the H pattern. And the home builders, the HGX Philadelphia housing sector, that's pulling back quite sharply here, has pulled back quite sharply. And what's really important about this is that if it goes underneath 164.03, the low of a few weeks ago, there's a really good chance that the housing sector is going to continue to be under pressure right into the close of September. I shouldn't say the close, but in September. Now, here's the final one, and that is, I just showed that. Yeah, this is the final one, and this is what I showed my subscribers. Every day, my subscribers to my opening call get a really detailed look at all the different instruments that we are trading, the stocks or whatever, the ETFs, whatever it is. But also I discussed chart patterns as they unfold. And what I'd said here, let me see if I can just get to it over here. I think I can. Yeah, this is typical of what? This is a discussion of the DOG, which is 100% pro shares trust short the Dow 30, and the DIA, which is basically 100% long. Of course, you can short and go long either one, but they are made as short and long positions. Now, what's interesting about this is that in the pattern that I'm looking at here, if the DIA was to spiral above the peak A of Friday, that would say there's a real good chance the 150 to the 141 area could be traversed for at least a little while. Remember the pattern I was talking about in the dollar? That rising inside track buy signal, if it broke underneath that red line, it's negative. If it holds the green line and bounces up, that's usually a positive. So the Dow Diamonds are saying, hey, there is enough strength here just to give a bounce, but we should go to at least a trough D. That's number one. It's at trough C at 147.37. At 29.70, the DOG, which we shorted in the Dow some time back in July, is looking like it's holding the repellent. This should be a repellent zone. And by now, the DOG should be down in the 28-something area. So it is holding pretty darn well. And if it breaks above 29.70 and starts to hold in the 30 area, then I have to consider a break out on the upside for the DOG. That's saying that there's weakness in the Dow Diamonds because it is moving up. It's the inverse, the mirror image. And the Dow mirror image, what's the mirror image? Well, a mirror image, if you go to my CD introducing the Chapman wave methodology, there's a whole discussion on slide 403 out of 476 slides. And it says this is gold way back in 2001 when I was getting a low in 2000 on the XC. I think it was at 44, got a buy signal. That was coinciding with the top in the dollar, and the dollar then turned down. There was this inverse relationship for such a long time. So gold starts to move up. But look at the pattern. There's a cup pattern here. It's more like an invert V-shaped pattern. But look at the way they're going in opposite directions. That's what counterpoint. Anybody know anything about Bach's famous pieces? The finest of the Bach pieces invariably use tremendous amount of counterpoint, where one line is going up and another line is going down. Just a brilliant way that it evolved into that Baroque period. And Bach was an absolute genius. He used to sometimes have a 5-part invention with counterpoint going on, etc. So now look at this. There it is. When I give it a discussion on it, give a discussion on this. This is the overview that I give every day, the overview of market today, where we are on the bigger picture, what we're looking at, the 120-minute time frames, how you've got to break out of different things. There's the VIX making a peak F. It looks like a peak F. Might only be a peak B. We don't know. And yes, the Diamonds 120-minute chart. This is the Richard Arms Trin Index, which I use in a particular way, very unique way. And this is the arch formation that's forming in the Dow and the S&P. And you can see it is pointing down. But at any time, you could get the relationship that says, I'm a little bit tired now. I need to go back and visit the areas that were visited way back, in this case of July, in that whole area, going up to 15,000 in the Dow. We'll see. It doesn't have to happen. Hey, look at this chart. This is the VIX that I just showed you. The big discussion here on what's happening. What is this one here? That's the same thing. Then there's a chart that my subscribers got, which involves the S&P, the long-term S&P. Well, that is telling me that some things are happening right now that if you don't make a note, one of the reasons why I had no intention of going long anything in the stock area, unless it was maybe a metal stock or something like that, was because I believe that we are in the process with the tightest turn now in the weekly. On Friday, I had upgrades of sell signals to sell modes in most of my indexes, covering the key sectors in the market. So that's something pretty serious. 877-927-6648. Love to take your calls at TFNN.com. Don't forget, go to the front page of TFNN. Wow, this is a fantastic opportunity for a competition.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors.
TFNN has just announced our first ever virtual trading competition, and we're giving away $10,000 in cash prizes, and it's free to enter. Sign up by Thursday, September 5th at noon Eastern, and the trading competition will take place the following week, Monday, September 9th, with first place winning $3,000. Don't delay, as you won't be able to register once the competition begins. Sign up now and reserve your spot in TFNN's $10,000 virtual trading competition. To sign up and for all the details, log on to TFNN.com.
Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. 877-927-6648 is the number to call. Now, for those of you who've got a lot of new people here, a lot of new people looking in the den, etc., let me just go through what I'm looking at here. This is the gold contract, the December gold contract. And I should mention we are long from almost the low in a gold ETF, which tracks gold itself. So 1182.60 was the low on 28th of June. This is the December contract itself. It goes, I look for the most identifiable lower low. You don't know it at the time. There are other techniques to identify it. I'm looking back now. And that occurred on June the 28th. Yeah, June the 28th. So that starts, and what you look for in the Chapman wave methodology are 4 successively higher peaks, as long as all the technicals are in place. It could be chart pattern, looking at a V-shaped pattern. It could be using the stochastic down there or the MACD. So what happens, over the years, back in the 1980s, instead of using numbers, because Proctor was a big deal in the Elliott wave, being interviewed everywhere you could, everywhere. I decided I would not stay with the numbers. I would go with the letters. And uppercase letters for ascending and lowercase for descending. So now look at this. You go peak A, and you see that black line there, right there, that black line. Let me just see if you can identify it. Yes, very nicely. That black line is the 9-period exponential moving average. And what that is a look back of 9 periods with an emphasis on the closing price of the last session. What happens is it pulls back. It also makes an arch formation. This turns out to be a very positive arch formation, like an H pattern, lowercase h. The moment it breaks out above, and in this case above 1269, it says, hey, there's a really good chance that not only are you going to get a breakout that has strength, if the stochastic and MACD confirm the rally and it holds above the 9 EMA, you could get to a D, the fourth highest peak. Lo and behold, goes to B, it goes to C, pulls back, hugs that line, and it goes to a doji candle D on the 23rd of July at 1349.20. Then it pulls back in a little mini trough A, trough B, trough C, trough D. You see those on the downside are called troughs, little V-shaped patterns, lower lows, and it goes to the fourth lowest trough. At 1271.80, it turns around on August the 7th and starts to move back up, and it goes peak A. But that A was underneath 1349.20, so I go gray A. Then what happens, because the stochastic was moving higher, but the on-balance volume was a little wobbly there, that blue line, I decided I would call it E/B, meaning I didn't have to do any thinking about it. It was very positive. I could have parallel wave counts here. It's a B if that was really an A and an up arrow there made it a buy signal to buy mode, meaning it's going to go to D. Or it's just continuing that old pattern because the MACD, fast-moving average, deflected from the slow-moving average, so it could be a continuation pattern. You don't know. And I still don't know, and it goes to a doji high on the 28th of August at 1434. I still have no sell signals. We're still long gold. It pulls back, holds the 9-period moving average. I've got an F/C. It has all the characteristics of an F, meaning at a peak after the sixth highest peak. That's where you should get a pretty darn good sell-off. But there's one particular tool that I use based on the MACD that says not yet, buddy. You got to watch out because there could be a deflection higher, and that's exactly what's happening here. There's a chance now that even though the dollar, let me just jump to the dollar now. I always like to look at the relationships. If you're new here, you'll get to learn that I love the relationships. That the dollar is now with an up arrow. I have to put that in. Why? Because the MACD is good. The histogram is good. The stochastics at 88% is broken decisively above all the left side peaks made from the arch formation. There's the arch formation, lowercase h, another lowercase h, and then it breaks out. But it needs to go above. It doesn't have to close, but it needs to go above 82.49, the high of the second day of August, in the dollar index. And today's high is in fact 89.50. It's close to it. If it breaks, it doesn't have to close. It just has to break above 82.49. Today's high is 82.50. It did it by 1 penny. Great. That says to me that the dollar, in fact, is moving higher. There's a left side, right side potential pattern here, and the next target on the upside, I'm going step by step, would be this candle right here of 82.94, the candle of the 19th of July. We'll go back to gold in a moment and see the relationship or non-relationship, and I'll be right back straight after these messages. 877-926, 877-927-6648. Oh, 46.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and discuss trading strategy while gaining high-definition access to all TFNN hosts' charts and screens during their live daily programs. If you're not already a member at TFNN, then the easiest way to become a member is by simply signing up for our $10,000 virtual trading competition, and the rest takes care of itself. In order to register for TFNN's virtual trading competition, you have to sign up by Thursday, September 5th at noon, and that's right around the corner. So don't wait and sign up now. For all the information and to fill out your entry, visit the front page of TFNN.com. TFNN's open house in the Tiger's Den for 2 weeks only, ending September 13th. Sign up today.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. Let me just continue. I just want to finish up with the gold. The market has sold off a lot. It's only up 20. And what I said to subscribers this morning, watch out. A rally failure going to just the plus 20s after being up triple digits, or going minus, would be very negative and would confirm for me that even though we could get counter-trend rallies, the tide has changed. It's the TIDE. Look for the tide. It is the most important thing. One of the aspects I was looking at when I looked at the gold chart, one of the reasons why I wanted to go in and say, look, it's only a trade for now. It could go higher, and we'll adjust our stops accordingly, is because there was such a big sell-off from mid-year last year in the 1800 area, all the way down to in the gold continuous contract down to the 1179 area, 1180 area, that this bounce could in fact have legs in terms of time, and if you got the low in terms of percentage, certainly for stocks, fantastic percentages off the lows, but more importantly, gold seems to me, from the action that I'm looking at, to once again become a currency of fear. So the up channel on the weekly chart is intact. It's made a peak B, a leg B. It's a peak B. This week there's no new high above 1434. Let me just, some of you don't get the continuous contract. Let me go to the December contract. If the December contract does not break above 1434, same thing, that continues That would be a peak B. If it does, it continues the leg up. And what does it say? It says leg B up should go to 1470, which is the 200-period exponential moving average. And that starts to get into the major candle of the 3rd of May, the week of the 3rd of May. Between 1490 and 1444, that little doji with actually is a wide-legged doji, but not in relationship to all the other bars. So that's my gold. Gold, I believe, is in an up mode in the daily. It is about to confirm an up mode in the weekly. I'm holding off. It doesn't even matter what I give the technical terms. I have put an up arrow in because it is so strong in the MACD and the slow stochastic. That could fail, but right now, that's what I'm staying with. So, and now I just want to go back to the dollar contract for the, this is the continuous contract, just to say that in the weekly chart, that V-shaped pattern that we saw at the top, that allows for a bounce back. But I wouldn't be surprised if the dollar actually starts to get a lot of resistance right there at the open of the week of the 19th of July at 82.92. That's going to be key. If the dollar's able to climb into the 83s and hold there for the whole week, that'll be very impressive action on the shorter term. But it also coincides when you look at the EUR-USD. The EUR-USD is, if you're looking at it in the weekly, it's made a cup formation with a very quick peak D that's been made. It's stalling. But if you look at the daily, that was a peak E in the Chapman wave, and look at that pullback. It's about to test the 1.311 area, which is the 200-period exponential moving average, that pinky line right over there. So I just wanted to go through that. Now I'm going to go to Lou in Nashua. Hi, Lou. How are you? Lou, you there? Oh, I know. Lou always listens. There you are. Lou, you're there, right?
Yes, I am.
Okay. How you doing?
Okay, and you?
Very good, thank you. You'd like to look at the
Euro.
So I'm looking at the EUR-USD currency pair. Is that good?
That's right.
Okay. Do you have a position in this?
No, I don't.
You don't? Okay. And you're looking to get a position, any particular side of this?
Short.
Okay. If you were going to short it, let me just grab the 120-minute chart. Yeah. I know that you watch this really closely, and I also know that you have a very strong discipline in the way you handle the trade. I know this is a little early in the day. There could still be a bounce. There could have been just a sudden bad news flow through that could be over in a short while, and the market tries to go back to being up 58 on the Dow, up 7.5, or it'll be a little more. It'll be 9 on the S&P. There is a divergence between the Dow and the S&P. However, I'm going to recommend, because of the strength of this particular down move, and I don't really see any strength in the Euro-USD currency pair until 1.311, and if it does that in this leg, there could still be a leg D down. The candle I'm looking at is at 1.30656, and that's on the 18th of July. Here's my recommendation. I would take a small position now, and I do say a small position. Why? Because obviously the opening salvo today would have been right at as it started trading, as the market actually opened. But I'm looking at this, and I'm thinking that there will be, if there was a bounce, 1.3170, to be safe. If you don't want to do anything, you have to have patience to wait for a bounce to the 1.317 area, and if it takes that out, it could even bounce to the high of the doji candle of 1.318. This is what I'm thinking, though. There is something going on in the euro-dollar currency pair that is very negative, and that even a bounce says that it's going to have to do some testing between 1.31 and 1.30, with a chance that it could even get to 1.29 based on the strength of the dollar, the weakness in the euro. So that's why I'm suggesting maybe nibble on a position right now, but I would add to that position if there's a bounce, and it has to happen by about 2 o'clock this afternoon, somewhere around there. If there's a bounce, it starts to climb, then you've got to get out of that position and just have patience to wait. But anywhere between 3.317, I'll give it to you right now, 317, So that's 317. Yes, anywhere between 0.317 and 0.318. That's the area that should become resistance. Now, it's been beaten down a lot, and there could, in fact, be a sudden up spike. But if you're looking at a shorter-term trade, the trade is to maybe wait for a bounce short. If you're looking for a longer-term trade, my eye is telling me that the euro, especially with the monthly chart right sitting on the 9-period moving average, is going to actually break below it. And that means that it's probably going to go to the 1.30, 1.29 area. So I hope that helps you. It's how you handle the trade that's going to be a little tricky since, as I say, it's had a pretty decent move to the downside so far, so you can expect a bounce. If I was doing the trade, I would probably look for the greater move to the downside and try to be as opportunistic as possible and see if there could be a bounce to the 1.3. Oh, let me just tell you right now. I looked at it a moment on the daily chart. Yeah, I think the 317 to 318 area. That's where if it's going to bounce, it should bounce and then stall and keep and continue down from there. That's the way I'm looking at it. So, how you trade it on the shorter term, or if you want a little bit more longer term position. The longer term position means you're going to have to widen your stop a little bit. But I'm looking at it as if there's going to be at best an arch formation. And then it breaks 1.31 and it starts to sink below that. And that means that the dollar will have to maintain its strength, and the continuous contract should get to the resistance at 82.90. If it does that, obviously the euro is going to pull back quite a bit. But I've got a target for the dollar that says there's a good chance by the 11th of September it is testing the 83.11 area. So I hope that helps you.
Yeah, that's very good, Basil. Thank you.
Thank you very much for calling. Always appreciate your call. Let's go to Victor in New Jersey. Hi, Victor. How are you? Victor's there? I know Victor's there. Victor... Victor dropped. I'm sorry. I didn't realize if it was a call that you couldn't wait. Victor's looking at POM, Pepco Holding. Now, as I recall, we looked at this before, and I said I would not be doing anything on the long side. I didn't like it. It's trading at 18.69, down 25 cents. Now, I don't know why I have not got my notation on this, because I remember doing this. So what I'm going to do is, that's peak A, peak B, peak C, peak D, and then it goes A, B, C, D, E, F. Let me type that in. And you will see, folks, I'll do this live so that some of you are new to my work. We're looking at POM on the weekly chart. I'm going to the candle of the week of the 13th of April. The low was 18.14. All I'm doing is I'm counting each successively higher peak. Remember, these are called floating letters, so that the letter continues on its way up until, and it's called leg C, leg D, until it makes that V-shaped inverted V, so that I get a peak, and that becomes a peak D. In this case, I put a down arrow, put an up arrow here, and it goes peak A. You've got to be careful. You've got to identify. Your only objective here is to take time to identify very clearly each successively higher peak or trough. That's all your objective is. And you don't want to be lazy. You don't want to. I can eyeball it because I've just done hundreds and hundreds of thousands. At a certain point, you'll get real good. I get notes from people all the time saying, well, we're getting good at identifying the peaks and the troughs. 52, 50, 51. That's what I thought. There it is. That's why I stopped to look. That's A, trough B, trough C, trough T, and we're going to trough E, getting close to some kind of support, but boy, you don't want to be catching a falling knife. That's an expression we learned here in the den a long time ago. We had one of our denners selling metal mesh gloves. Why? Because there were so many people trying to catch falling knives, and not an advisable thing. So this is going to be E, A, the other one, yes, E, and that's just a right arm extension to an F right there. So that was the sell signal. This looked like a buy mode but it didn't confirm. The stochastic never once went over 80%, and that became a sell signal. Yeah, I don't like it. Pepco Holdings, no way. I don't like it. I believe that you were looking, I think you were looking at the short side. So, Victor, if you want to call back, I don't like POM. I think it's still got a way to go to the downside. Be very careful with it. And I'm not sure if you were nibbling on it or anything, but I got a feeling that I didn't like the look of the weekly chart, and that's why I said avoid it. So let's go to our next call. We've got Bob in Rumson, New Jersey. Hi, Bob. How are you?
Good morning, Basil. I'm great. I hope you had a nice weekend.
I did. Thank you very much.
I was wondering, where do you have IWM on the weekly chart in terms of its peaks?
Okay, let me just do this. I'm going to expand the chart, folks. Usually you'll see the chart on the left is the daily, the chart in the middle is the weekly, and the chart on the right is the monthly. Let me just get it so that it's as clear as I can make it. That goes away. I had put an upside down V. That usually signals that we've already had a down arrow, but it went higher still. And I put a plus sign. I'm getting rid of that. I have a high of peak E at 105.63. Technically, I should say, it's only closed once under the 9-period moving average. We're looking at the iShares Russell 2000 ETF trading at 101, up 63 cents. Up 63 cents? Oh, yeah, we're looking at the daily. I'm on the weekly right now. Well, if I look at this, everything about it, the MACD's turned down. The stochastic's now at 69%. On balance volume is falling. The relative strength is way lower than it was at peak D. Everything about this says that there are weekly sell signals in the IWM from a peak E, and I'm actually now going to go with the inverted hat. Even though it's the first 2 hours of the first week of the first day of the month, trading month, I'm still going to put that in. Everything about this says to me the IWM is going to pull back, and it's going to pull back. The major support that I see that's going to be tested soon will be 96.94. I have a leg E in the monthly chart. I believe that's going to turn into a peak E. Now it's going to be a really interesting thing. If I'm getting E's in some of my monthly charts, D's in the S&P and the Dow, what does that mean looking at? How can there be another rally at all, which I'm anticipating later on after this digestive period has concluded? Well, that's because there are enough stocks that are still acting really well to be able to carry the Dow, to carry the market itself into higher levels. Most importantly, what I'm looking at here is that the daily, I know you asked about the weekly, but of course we need to look at the daily. The daily is making a trough D if there's no new low today, but the MACD is not very positive, and the stochastic had a positive divergence, so any weakness here that remains into the close, that'll be a big negative. That's not to say that there isn't enough buying pressure coming around to try to buoy the market, at least for a couple of days, but that's all I would expect, is that there's when I looked at hundreds of charts over the weekend, looking at the weekly and monthlies, I was duly impressed with the number of stocks, major stocks, that have gone to leg D's and E's in their monthly charts. So that says to me, you've got to be careful, but they were still showing tremendous strength within the MACD and the slow stochastic. So if you don't mind holding, I'll look at the IWM. I'll tell you the parameters I'd be looking for on the upside and the downside of the IWM this week. So you want to hold on? Okay, good.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. This is the Tiger Technicians Hour. My service here at TFNN is the opening call, daily, very intensive market letter. Gives you the parameters to look for, what we're looking at, why we're looking at it, the different time frames, the short term, intermediate term, long term, and all the different indices. And we have been on the sell signal for a long time. August the 3rd, we got a whole bunch of sectors, and the S&P short, right, the opening just about, it wasn't the opening for the S&P, and I just feel very strongly about it. It wasn't a market call at the time. It was a Chapman wave technique of identifying peaks. And in other words, I didn't know how deep it would go, but I needed to implement the strategy that we've used so often before. Let's go back to Bob. Now, Bob, do you have a position in the IWM?
What I've been doing over the last, say, 30 days is shorting it on pops.
Good.
And so I should have reshorted it this morning. I had spoken to you on Friday, and I covered my position on Friday because of the VIX moving into the leg D.
But also, over the weekend, I think the strategy, that's the safest strategy, to take your profit. That's the best thing to do, especially on a long weekend, especially a news-related weekend. Yes.
True. So I'd like to get back in it, and I have to agree with what you said earlier. The market not acting too well at the moment. So,
well, you see, this is what I always tell subscribers. I always say, if you're looking at a market and you're making, like the dollar's making higher highs and higher lows, in what time frame? In the daily time frame. So far, the daily is saying, I'm in a buy mode. Gold is also has been doing that. Then you look at the different time frames and you've got to get your perspective. When I look at the time frame of the IWM, the daily is saying, I'm very oversold. I should be bouncing and holding. The characteristic, I'm making lower lows and lower highs. I should still bounce. But the character of a bear phase, and I'm not saying a bear market, I'm saying a bear phase, is that every bit of news is treated as bad news. Rallies are only counter-trend rallies. They tend to fail very quickly. And in the last hour of trading, instead of seeing buying as we saw for years and years and years, now we're starting to see selling. It says to me, be really careful out there. There is just a healthy digestive phase that needs to be concluded, and we're only at in some of the charts, I'm only now beginning. Look at the Qs, the QQQ series. That is only now saying, hey, there's a chance that I could be going down because I've popped out of the up channel in both the weekly and especially in the daily. I just need to revisit those areas so that I can test them to see if I can go even higher. And this is leg E, possibly peak E in the monthly chart of the Qs. But it is a complex thing. It's like a G in the weekly chart, and the back D hasn't yet turned low, hasn't crossed negative, and the stochastic is still at 85%. So you can see it's sector by sector and chart by chart that you want to do. So I agree with you, and I think you've done very well by shorting the pop-ups.
I've done well because I use your system.
Well, thank you very much.
And I trade for a living. In fact, I'm going to subscribe to your newsletter because, I mean, it's just an incredible system. I mean, it's not perfect. Nothing's perfect, but it saved me a lot of money and made me a lot of money over the years.
You know, it's funny that you say that. I was just every once in a while, my wife just forces me to tidy up. I've taken the smallest room in the house for my office because I knew if I had the biggest room, I would all the papers would be right across. Why not? So she said, I can't even see the floor. I said, but I need it. So I took everything out. What did I do? I found a whole bunch of just exactly what you said. People saying, thank you so much for introducing me to the Chapman Wave because it saved me so much and my family so much money. Thank you, and thank you for that endorsement. I really appreciate it.
Time frames, you've opened up all the different time frames as well to us. Thank you, Basil.
Well, thank you. Hey, congratulations. And I'm going to say to you, on the next big rally, that's where you can get a bigger position for the TZF.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.